Clark Flynt-Barr. She's our government AARP affairs director who advances policy on consumer protection, retirement, financial services, and fraud prevention. She has an MA in international affairs and transnational security, brings prior experience with the FBI as well, Senate Judiciary Committee, and blockchain analytics policy with a focus on financial and criminal justice. She'll be presenting on cryptocurrency ATM Kiosk fraud and other national policy considerations. These are emerging trends with significant implications, so we're excited to hear your perspective. Thank you, Clark.
Thank you. Thank you so much. And you've somehow made me look really fancy up there. I'm impressed with your PowerPoint skills. Hello, everyone. It's a pleasure being here today. I'm from AARP's national office, as Otiamba said. And this is my first time in New Mexico, and I have thoroughly enjoyed my time here, so I'm so thrilled I got to come and do this presentation, and really encouraged and motivated by everything I'm hearing from all of you about the work that you're doing in the fraud prevention space. So we started talking a little bit about advocacy and policy solutions and what else can be done, so that's what I'm here to talk about today. I spend most of my time working on fraud policy at the federal level, but we've also been doing a lot of work at the state level, and I have several colleagues who lead that work, and I'm sort of stepping in for them today. And what I wanted to talk about is some of our model legislation that we have in the fraud prevention space, and walk you through what we're seeing on the ground across the country when it comes to scams and what states can do about this. And there is good news here. There's a lot that can be done, which is really exciting, and hopefully we'll be giving you a menu of options to look at. So, the three things I want to talk about today are cryptocurrency kiosks, which have come up a couple of times already today, gift card fraud also, and report and hold legislation, which is transaction holds at banks. And I think, Paula, you talked about this, and how nobody stepped in at all. And this is another tool that can be provided to help slow fraud down so other people don't experience what you did. All right, so let's kick things off with cryptocurrency kiosks. Who here has seen a cryptocurrency kiosk? About half the room, okay. I'll show a map in a bit, but they're sort of everywhere. They look kind of like ATMs, but maybe a little bit more futuristic. Like they have touch screens, it's less buttons, it's more space agey. And the way that they work is that you feed cash into them. So unlike an ATM where you're withdrawing money, in a crypto ATM, you are feeding cash into them, like $20 bills at a time. And then you are providing the kiosk, the ATM, with a digital wallet address to send the money to. And so the machine will convert your cash that you've fed into the machine into cryptocurrency and send it to an address that you have specified. Now, as you can imagine based on that description, these are very popular with scammers. Cryptocurrency moves really quickly. It's hard to trace. Even when you can trace it, knowing that the money is in a wallet in China is not that helpful to you, which is why, as the previous presenter said, speed is of the essence here. And so we were seeing loads and loads of reports about the amount of fraud happening with cryptocurrency. And this is the FBI data from 2025. You can see that, this is all cryptocurrency. You can see that more than half of fraud moved in cryptocurrency. And this really has disproportionately impacted older adults. You can see from the bottom left, I'm sorry, these are small, but hopefully you can see them in the printed out slides here. And crypto scams are really, unfortunately, punching above their weight. There are higher losses with each of these reports than you see with other types of money movement. And this is a real trend nationwide. So who is being impacted here? You can see on this chart, the 60 plus category has like a significantly higher number of reports of fraud here, as well as significantly larger losses. 72% of the cryptocurrency kiosk scams were borne by older adults, which is really astonishing and why AARP wanted to get involved in this issue. Okay, I don't think this video is going to work, so and I've sort of explained how the fraud works, but often it'll be a similar scenario. Oh, this is an ad for a water park. I'm just going to move on to the next slide, and then because of our time. So the way that these scams will work is you'll get a call. Something urgent has happened. The one that I hear most often is somebody who gets a call from their grandson or their child, and they are panicking, they are crying, they say they're in jail, they've just hit a pregnant woman with their car. It's for some reason always a pregnant woman with their car that they've hit, and they're in jail now, and they need you to pay bail or bond in order for them to be released. And they'll say, my lawyer is going to call you, and they're going to tell you how to pay it. It's $25,000. Then you'll get a second call from the attorney, the fake attorney, and they will say, look, the court systems are down right now. What we need you to do is go to this special government ATM, and we need you to feed $25,000 in it and send it to this address. And just like that, the money is gone. It moves really quickly. We also hear about these used in tech support scams. That's very common to hear, the example that the gentleman gave about the McAfee virus warranty software is a very common way that the scam will start and will end in money moving using cryptocurrency kiosks. And then romance scams are another one. And it's usually as part of a larger and longer set of transactions where first the money has moved through wire transfers, then it has moved with checks, then it has moved with gold bars, and crypto kiosks will be somewhere in the mix of one of the many ways that the money moves. And I'll often hear people say that they don't really think they have that many in their state, or that's not a problem in their state, but there are 30,000 of them in the United States. And if you ask your smartphone, if you Google crypto ATMs near me, you'll see this is the map from New Mexico. There's 161. And I zoomed in here. The red circle is where we are now. And you can see there's a number of crypto ATMs right near us. So these are really everywhere. And it means that this risk is present, not hypothetically, not in the future, right now. People are being scammed using these machines now. And the Iowa Attorney General did a really interesting assessment of the crypto ATM operators in her state. And she found that for the top 2 operators in her state, more than 94% of the transactions moving through those machines was fraud. For one of them, it was 94 point something, and for the other operator, it was 98% of the transactions that were moving in fraud. And I would be willing to bet that the rest of that money is either somebody who doesn't realize what this machine is and is sort of messing around with it to see what it is, or it's money laundering. So we're seeing just lots of criminal activity with these machines. And the average loss, according to the FBI data, is $40,000, which is a tremendous amount of money. That is life-changing amounts of money for most people. And that is money that is being sucked out of our communities. It is money that is not being spent at the grocery store. It's not being spent on your hobbies. That means you're more likely to end up relying on government assistance. So this is really a very impactful issue. So AARP, when we started embarking on this, talked to law enforcement all over the country, talked to prosecutors, victim advocates, victims, to talk about what solutions would be helpful here. And the good thing is that there are actually a lot of potential solutions here. So the first is licensing requirements. In many states, cryptocurrency kiosks have not been regulated as money transmitters. So first, regulating them as money transmitters. So there is somebody in the state who has supervisory authority over these machines, the same way that they would over Western Union, over banks, over other financial institutions, so that there's authority there who is supervising and enforcing, is really key. The second thing that's really important is daily transaction limits. In many cases, you can sort of feed endless amounts of money into them. Like, you can feed $80,000 into a machine in one day. It will take you hours. I heard this heartbreaking story about a woman who was in a gas station feeding money into a crypto ATM, and it took her so long to do that the cashier at the store came over and brought her a chair. He said, "You look really tired." Think about the intervention opportunities there, which is kind of maddening. But it takes a really long time to feed the money into these machines, and then you can just see these tremendous amounts of money, poof, gone. So daily transaction limits are a way to really limit the amount of money that can be lost in one of these scams. And so those have been key. And we've been pushing for about $1,000 daily transaction limit, which, based on the average transaction size that the kiosk operators tell us about, they say their average transaction size is about $350 or $400. So I think $1,000 is a relatively reasonable limit to set there to stop fraud. The other thing we've been pushing for is refunds in the case of fraud. And this is really important because it puts skin in the game for these companies, right? If they are going to be on the hook for providing a refund to victims of fraud who can prove that they were victims, then they're going to have an incentive to root out fraud and to stop scams when they're happening and to actually be proactive about that. So that is also very key. Another thing we heard from law enforcement was that, so I showed this map, right? This is from a company called Coin ATM Radar, and this is a marketing tool. This is not like an official map from any sort of state authority or federal authority that knows where all of the crypto kiosk locations are. And so law enforcement were saying there are kiosks that we're learning about that aren't on these like marketing maps, and we want to know where they are so we know what we need to be paying attention to and where we should be engaging. So we also pushed for registering the kiosk locations with the state so that law enforcement and regulators will know where they are. Some other things that were important were to have live customer service during operating hours, so that if somebody is feeding money in and goes, wait a second, like either this machine isn't working or like, is this what I wanted to do? Do I want to get my money back? There's somebody they can actually call and they can reverse that transaction. And not all of these operators have a customer service line. And so this was, an important protection here. Paper receipts were another provision that we pushed for, because what was happening with the scams is that the scammer would say, send your confirmation to, and they would give the scammer's own email address. And so the victim in this case would not have any proof that the transaction happened. And when they went to law enforcement wouldn't have any of the data that they needed to investigate the fraud that happened in that case. They wouldn't have any of the transaction details so they could trace where the cryptocurrency went. They wouldn't have enough information to conduct a thorough investigation. So having paper receipts with those transaction details is really important. Another important thing is disclosure of fees. These machines typically charge around 30% in fees. Imagine if when you went to your bank and you sent a wire to somebody else, you paid 30% in fees on that. That is wild. And usually those fees are buried in, 57 pages of terms and conditions. So you have no idea that you're paying that until after you've sent the money. They also have unfavorable exchange rates. I liken it to like when you travel abroad, people say don't take money out of the ATMs in the airport. The conversion rate is not going to be as good. Similarly, crypto ATMs do not have a good conversion rate for dollars to Bitcoin, for example. You would get a much better rate if you were an investor, a true investor, if you went to Coinbase or Kraken, Gemini, et cetera. Then a few other things here. The use of blockchain analytics. And this is a tool that allows these crypto kiosk operators to see, is there any risk associated with the address that this money is being sent to? Is this digital wallet address known to be affiliated with a scammer or some other illicit activity so that they can be more proactive in their compliance? We also pushed for warnings on the machines and a dedicated line for law enforcement to call, because we were also hearing from law enforcement that they would call these operators to try to get victims' money back or to get transaction details, and they would be told, there's nobody answering the phone. They just wouldn't get a response. They wouldn't get a response to emails, to phone calls. So this was a big issue. And then finally, requiring user identification. And this was another piece to help tie, in the cases of fraud, the victim to a specific transaction so that it was easier for them to prove that they were the victim. So the daily transaction limits, I want to drill in on this a little bit, because this is something that we think of as really helping to stop the bleed. When we see these scams, they're rarely moving in a single transaction. It starts with a few $100s. It'll work its way up to much larger dollar amounts. And the more friction you can introduce into this process, the more you can slow this down with things like daily transaction limits, the more you can help prevent large losses. On the refunds for fraud victims, this was a provision that we went back and forth with the kiosk operators on a lot. They said people are going to tell us that they are victims, they're going to lie to us, they're going to defraud us, the company. And we said, okay, well, what if we require an affidavit or a police report, some sort of proof? You could ask for proof in order to ensure that you were not being defrauded as the company. And so this was something that the kiosk operators were then willing to work with us on, and they agreed to do fraud refunds in most cases. So that's been very exciting. And like I said, it really puts them on the hook, makes them accountable for the fraud, and makes them more proactive in their fraud investigations. So this is where we started in 2023. And I think this is a particularly impressive legislative story, because you can see there were only 2 states that had crypto kiosk legislation in 2023. And that's California and Connecticut. And this is where we're at today. There are 30 states now that have crypto kiosk laws, and 3 states, Indiana, Tennessee, and Minnesota, have actually banned these machines outright. I think in all 3 of those states, they started with a bill to regulate the machines. And as the legislators learned more about what was happening, they said, no, you know what? We're not going to regulate it. We don't want this in our state at all. And so that's been a recent trend that we've seen. And let me compare some of the different elements that we're seeing in different states. So you've got, in Connecticut, they have different daily transaction rates for new customers and existing customers. You have, some of the states have a right to paper, some do not. Some have done the full bans, as I said. Some are holding transactions for 72 hours to try to insert more friction in the process. So there's a variety of different states to look at if you're curious about the different approaches. And we have a full list of all of the 30 states if you'd like to see that. And I'll also point to cities and local ordinances as being quite successful. We've seen a number of towns and municipalities looking at this at the very local level and regulating these machines at the local level. And this has been very successful. And I'll say, this is exciting for me to be here today, because yesterday we got news that largely because of all of these restrictions that have been put in place to prevent fraud, one of the largest cryptocurrency operators actually declared bankruptcy. And they said, yeah. And they basically said in their bankruptcy declaration, like, we couldn't figure out how to make the business work if we had to do all of this fraud screening and we had to stop the fraud. And I think that points to an underlying problem with the business model, perhaps. Okay, so 2 of the other elements that I wanted to talk about are gift card fraud. And this one is perhaps a bit more familiar to most people, but it continues to evolve in ways that are worth paying attention to. Scammers really love gift cards. I was in Florida this summer for a conference, and I wouldn't recommend going to Florida in the summer, by the way. And I met this woman whose sister had $300,000 stolen from her in gift cards. She spent the entire month of July buying gift cards. And her family knew about it, but wasn't able to, they tried to intervene, tried to talk to her financial advisor, and ultimately was not able to convince her that the fraud was happening, and it was really a shame. But it goes to prove that you can still, I think people think of gift cards as sort of $500 scams, $1,000 scams, as he mentioned. But you can lose tremendous amounts of money with gift card fraud, and we continue to see that as a top way that people are reporting that. So, one of the most common scams we see with gift cards is the manipulated fraud purchase, or the manipulated purchase scam, sorry. And what happens is the scammer creates urgency, similar to the example I gave with the son that's in a car accident. There's a family emergency, there's a legal issue, and they instruct the victim to go purchase gift cards. And they often stay on the phone the whole time, the way that many folks have talked about today. And they direct the victim to particular stores, to buy particular gift cards, specific denominations, and then they'll ask for the actual card numbers, and you'll have to read them over the phone. And once those numbers are shared, the funds are gone. It's incredibly difficult to get those back. And the victim often doesn't realize that this was a scam or what was happening until much later. The second type of gift card scam that we see is the tampering scam. And this is more challenging because it doesn't actually involve direct interaction with the scammer and the victim themselves. What happens is the scammers will go into stores and they will take stacks of cards and they will physically tamper with them. So they'll get the PIN number on the card and they will be able to, once somebody, then they'll go back, key, and they'll put the cards in the store again. And when somebody buys the gift card and puts $100 on it, they're able to quickly scrape that money off. So you think you're buying a gift card for somebody's graduation. When they go to redeem it, it's empty. And often people don't even tell. This happened to me. My sister-in-law bought me a gift card, and it was empty. And she's not the sort of person who would give me an empty gift card on purpose. So I think what happened here was a gift card tampering scam. But of course, I never said anything to her because I didn't want her to feel bad. And so that is a very common scam that we're seeing now. And what will happen in these cases to help prevent this is that the stores that are selling these cards will keep these cards behind the register. They keep them in a more secure place so they're not as easily tamperable with. And so that has been very effective, as have warning signs around scams, secure packaging, which again helps with the tampering, staff training. I heard a great story from a neighbor of mine whose mother was called, and in this scam they told her to go buy gift cards, and she was at the cash register with a stack of gift cards, and the staffer at the cash register said, "Tell me more, why are you buying this many gift cards?" And she started to explain what she was doing, and the staffer was like, "You know what, I'm not gonna sell you these, and I think you need to go home and think about this a little bit more, call the person you thought you were buying these for." So that sort of staff intervention can be really key and can be a very important way of stopping the fraud before it's happening. And then the final thing is penalties or fines. Again, if there's if there's an easier way to prosecute the criminals in these cases, there's a greater disincentive to commit these crimes. Okay. And then very quickly, because I got the 5-minute sign, I'm going to talk about report and hold laws. So this is a very colorful map we've got here, because there's a lot of different varieties of these. Report and hold laws allow a financial institution to delay a transaction to give them enough time to intervene in fraud or scams that are happening. So, for example, if I go to my bank and I have never taken out $20,000, and all of a sudden I want $20,000 in cash, it gives them the legal authority and the legal liability protection to say, you know what, we're not going to give you that $20,000. We'd like to go talk to you in the back office. Paul gave that example. Or we're going to ask that you wait 72 hours and come back. It gives more time, it enters more friction into the system to help stop the fraud in its tracks. And this has been really key. We've seen 43 states pass this. Those are the ones that are in red and yellow for the securities industry. So broker-dealers and registered investment advisors have that legal authority. And then we've seen a trend in the banking space as well. And some of the ones in red are also have report and hold laws. There's about 23 of them. And then we've also seen a trend towards the insurance industry. So we're seeing more and more states take up these different types of provisions. And banks actually love them, which I thought was really interesting. The American Bankers Association put out a report about how effective these are and how banks that are in states that do not have these laws would like them. So yeah, these are a couple of the different options that are out there for state legislation. I'd love to talk to you all more if you have other ideas or if you'd like to hear more details. But we look forward to working with you. Thank you.